Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Thursday, September 3rd, 2009. We begin in the Eurozone where retail sales disappointed forecast, posting a negative reading for July. Sales were down 0.2% as warm weather and summer sales were unable to entice shoppers. A second report, the services PMI index rose to 49.9 in August in its final version, an improvement on the preliminary release. The index had registered a 45.7 in July. August's figure was the highest level for the index since May 2008 and shows that the sector may finally stop contracting and begin to show growth. A composite of the services and manufacturing PMI indexes rose to 50.4 from 47 in July, signifying a return to growth for the first time this year. Also, the European Central Bank held rates at 1%, their record low, and implied that they will keep monetary policy accommodative for some time even as indicators begin to point to a recovery. The ECB also raised its outlook for economic growth after Germany and France posted positive growth in the second quarter, though the bank expects the overall recovery to be quite uneven. The euro-dollar hit a high following the ECB decision at the 1.4350 area, but was turned back as that level ran up against a downward sloping line of resistance, and ECB President Trichet signaled policymakers have no plans to raise borrowing costs in coming months. The euro gave up its overnight gains, and by 5 p.m. New York time was trading below its global open. That keeps the pair, though, within its range this week and continues a pattern of sideways trading we have seen the past 2.5 weeks. Traders will now look for tomorrow's U.S. non-farm payroll report before testing the recent range with resistance at 1.4370 and support around 1.42 level. In the UK, the services sector remained in expansionary territory for a fourth straight month, with the PMI index rising to 54.1 in August. That is the highest the index has been in nearly 2 years. There was a solid gain in new business, though part of that was driven by ongoing price discounting. The report also showed that while some other UK indicators have fallen back recently, the services sector continues to make up the ground it lost during the recession. The pound rose against the dollar in today's trading, extending its rally from yesterday to set a new high for this week at the 1.6310 area. Pound-dollar pair is showing a widening channel with the distance between the resistance and support trend lines widening. Today's high ran up against resistance, stalling today's rally at around 135 pips, and the move from yesterday's low to today's high at 290 pips. The euro-pound pair, which we last looked at when it was in a strong rally in favor of the euro, has been declining the past several sessions after stalling at a double-top formation. The pair has broken below its support level for that consolidation period near the 0.8770 level in yesterday's trading. Today, the euro tested that level as resistance, after which the pair fell to a new 2-week low near 0.8730. That was a 38.2% retracement of the late August rally. Turning to the U.S., more Americans filed first-time claims for unemployment benefits than expected for the week ending August 29th. There were 570,000 new jobless claims, 4,000 less than in the previous week's figure, which was revised higher. Forecasts had called for a drop to 563,000. The data means that companies remain focused on cutting expenses by cutting their payrolls. The total number of people continuing to claim benefits jumped by 92,000 to 6.23 million. A second report showed the ISM non-manufacturing index registered a 48.4 in August, 2 points higher than the 46.4 seen in July, indicating contraction in the U.S. services sector for the 11th consecutive month, though at a slower rate. The business activity and prices indexes rose above the 50 level, while new orders stood at 49.9, just below the level separating expansion from contraction. The employment subgauge, however, continued to contract. The dollar-yen pair rose in today's trading after setting a low right below the 92 level. That tested a level of support that was cracked in yesterday's trading. The yen was generally lower today as stocks in China recovered and European markets were higher until the last hour of European trading. U.S. stocks stopped a 4-day slide as well, with a surge in trading in the last hour of New York trading. The Aussie yen, which is sensitive to risk sentiment and carry trade flows, found support in yesterday's trading and rose about 100 pips to set a high near the 78 level. Commodity prices were pushed up by gold, which hit a 6-month high just below the $1,000 level. That can help commodity-linked currencies like the Aussie, while higher gold is usually an indication of a sliding US dollar. The US dollar-Canadian dollar pair hit an upward sloping line of support in today's trading, pairing its earlier losses as oil prices fell and stocks fluctuated in most of New York trading. The pair did not retest its high from yesterday, and traders will now look for tomorrow's non-farm payroll release for further direction in the pair. Tonight, look for capital spending data from Japan, and overnight Switzerland posts its consumer prices. Tomorrow, the US will post its non-farm payroll release for August, and Canada reveals its employment figures as well. And that concludes our broadcast for today. Thank you for joining us here at cmsfx.com, and happy trading.